Millions of people in Florida are still without power after Hurricane Milton spawned tornadoes, flooding, and powerful winds. Joining us right now with a look at the storm's cost and the impact on the insurance sector is Yaron Kinar, who is Jefferies equity research analyst. And Yaron, how high do you think the insured losses will actually wind up being?
Morning. It seems like the industry escaped the worst case scenario. It seems like this will be more in the mid tens of billions of dollars. So call it 30, 40, $50 billion or so.
So escaping the worst, but you're still talking about tens of billions of dollars. You add that to what else that we've seen this hurricane season already with Helene just a couple of weeks ago and the potential for more. How would you quantify this year overall for the insurers who do have insurance in Florida?
Yeah, it's definitely an active year, not just in Florida, across the U.S. Looks like catastrophe losses across the portfolios will be well over $100 billion this year. It's a large event, but at the end of the day, it is a manageable loss in the grand scheme of things. This will be a large earnings event here, not a capital event, unless you are very concentrated in Florida. If you are a Floridian insurer, this is going to be a very, very tough year for you. If you're a national insurer who probably has no more than 3, 5, maybe 7% of your premiums allocated to Florida, this is still a manageable situation.
You say that there are certainly insurers that you'd be buying here, I guess, because the worst was avoided and maybe stocks were trading as if the worst was going to happen ahead of time. What are those stocks that you like the most?
Yeah, so we'd be pounding the table on the reinsurers, these entities that are really meant to kick in when you have a very large event in the tens of billions of dollars, if not more. So we are pounding the table on Everest Group, on RenRe, on Arch Capital. Those are names who have a fair amount of exposure to catastrophe events, but their business is to manage these events and the portfolios to risk the risk itself, so as not to blow up in such a situation, be there for their insurance partners. And the other thing we have to consider here is the worse the situation is, ultimately you also get pricing at the back end of it. So it looks like in this particular situation, given that it won't be the worst case situation, I'm not sure that we're necessarily going to see a pricing uplift at the back end of this. But we also have to remember that after Hurricane Ian hit in 2022, we already saw a very significant increase in pricing and risk-adjusted rates for the industry, for the reinsurers. And the fear was that as we ended 2024, considering that these particular companies did not face very significant losses the last 2 years because they changed the terms and conditions so much after Ian, that we'd start seeing some more significant softening of rates as the renewals of 2025 came about. If we have this level of risk and of fear in the system right now, maybe discipline is actually maintained and the pricing that has been very, very good maintains itself another year. That is ultimately a good outcome for the reinsurers.
It's an interesting industry to try and cover, Yaron, because there are times when the effects of a tough year where you have more than expected adverse weather events firms up pricing, and then you never know. And I'm thinking back, and I have a long memory. I remember Warren Buffett was on at one point, and it was after 2006 or 2005. I don't know how many storms there were in 2005. I think that was Katrina year, and then there was that 10-year, 12-year period where it was very quiet and no Category 3 made landfall in the U.S., and they had strong pricing the entire time. And it's like after 1 year, they think it's going to be an annuity every year, and then the insurance companies raise prices or have pricing power, and nothing happens for 10 years. Does that still happen, or are those days gone?
So actually, after Katrina, Rita, Wilma hit in 2005, you had a couple of years of very strong pricing for the reinsurance industry. But since then, or from 2007 or 8 until really 2000, 22 or so, you were not really in a hard market. Rates were not so strong for the reinsurers.
For the reinsurers,
yeah,
not for
but
the
why?
insurers to begin with.
Yeah.
Why? Because, to your point, we did not see losses or a significant storm hit for 10 years, and because there was abundant capital.
But you did see insurance rates go up to consumers in that period.
True.
Why? Explain what happens. Why consumers get stuck with this stuff, but the insurance
or get in a new business. I think you're on. I'm not understanding this at all. It's hard, isn't it?
It's difficult, and we're talking about different slices of the insurance market. The reinsurers really kick in at the higher levels, right? So if you have a horrific event, a Katrina, that's when they really take a very significant loss. The insurance company, think about Allstate, who covers your home. They are on the loss from $1, essentially, or from the moment your attachment or your retention kicks in. So any little hit to your home, a primary insurer like Allstate, like Travelers, will have to pay out. And you're not dealing only with weather, you're also dealing with fraud. You're dealing with fire, with construction defects, with anything you can imagine. All these things were all still very much alive and well for the insurers over this period. And they had to react to these inflationary trends.
Yaron, do you like the insurers themselves? Do you cover those insurers that you were mentioning, or you're only like the reinsurers?
So I'm pounding the table on the reinsurers as part of this storm, considering that a $30 billion or $50 billion event is a manageable event for them on the one hand, and on the other hand, the reinsurers are already in a hard market, and we expect that hard market to extend to some extent.
Meaning that they can raise rates.
They will not lose rates in 2025. The insurers are in a different situation. Here we also have to think about commercial insurers on the one hand and personal lines insurance on the other hand. We actually do like personal lines insurers. We like Allstate. We like Progressive. They have been getting rate in auto, but also in home. And certainly this storm will lead to additional rate needs in home. Commercial insurers are a different situation. It's not so much the weather risk. There are other perils that are challenging for them right now. It's more casualty that I'm concerned about. But I certainly am recommending on kind of the two ends, if you will, the reinsurers and the personal lines insurers as names that we believe will do actually quite well, bear this storm and get pricing at the back end of it.